Yo guys, what is good? I hope you're all doing amazing and are trading safely in the markets. It's your boy VGOK here, and today I've got an absolute banger of a video for you guys. In today's video, what I'm going to be going over is a trade breakdown for a US30 sell scenario that eventually achieved a 1 to 41 risk to reward ratio. This trade was an example of a Wyckoff distribution happening at a supply zone. So without any further delay, let's get straight into the analysis. So what we can see here from this before screenshot is whereabouts I put my entry, and most of these entries for US30 have been doing market executions because these movements can be so quick. So in this scenario right here, I had my higher time frame supply zone in this higher purple box, and then watching the lower time frame price action come into it and forming this entire distribution schematic as well. And after this point here, we had the break of structure to the downside, and having my entry right here at this 1 minute imbalance fill, having the stop loss just above over here, and then targeting at these equal lows, this liquidity level down here, and a lot lower at further demand zones. Now looking at the after photo, so we've got just after it enters right here, after it's hit the entry, it came into entry twice, but having being brave with the trade, we'd stay in, and then eventually it moves away from our entry, and then we can see here the final TP I took was at that 1 to 41 risk to reward ratio, and you can also see the time of this entry was before my usual time of entering any US30 trades. As you guys know from my previous videos, I like to actually enter my US30 trades around that 2 or 2:30 time for that main volatility spike that happens around that time. In this scenario, I saw that we were in the supply zone a lot earlier on, so maybe we could catch an earlier move into that volatility spike. And as we can see, that 2:30 p.m. time, we saw the movement come up all the way back up here and then eventually drop off again. So that wasn't a directional bias move, it wasn't an impulse, this move here, to give us that main direction. It was just merely a big move up and then a big move down. So this was a manipulation of price. So jumping into the breakdown of the actual trade, and just jumping into replay mode before we actually get started, because the main move down that I caught was this movement down in here. So just cutting off the chart just before so I can go through how I got through to this trade. Now, first things first, was just a case of analyzing the market structure on the hourly and the 45-minute time frame. And personally for me, in terms of the higher highs and higher lows that are seen in this movement up, within this uptrend, the significant ones that I had seen, we had areas over here which were significant. So we had this higher low in here, another higher low in here as well, another higher low in there as well, which obviously they both went on to create these higher highs and this higher high in here as well. So as we saw this movement come down, we can see that the body of these candles actually closed below the body of these candles, so indicating that structure has actually shifted to the downside after this move had been done. From then, I identified my main 45-minute point of interest area, which was this candlestick here, this base drop that was followed by a nice imbalance. That to me looked like a really nice supply zone to base my trades upon. And also looking at that general Fibonacci retracement level, it was within those sort of nice Fibonacci zones. So I had this rough area to base sells upon. Now, understanding that I wanted to actually sell off from this point of interest within an uptrend, I knew that I was counter trend trading. So if I know I'm counter trend trading, I need to be looking at setting established TPs, established take profit points. And for me, the demand zone that was left open down here was this 45-minute, or I believe it was actually a 30-minute candlestick of this 30-minute rally formation. for my main TP, because I thought there was a nice area of demand down in here which still hadn't been respected. So looking just to capitalize off of this main movement here. So we're looking to gain at least around about 200 points on this trade. So now just looking into the lower time frame price action, coming into our main point of interest, which was this sell scenario over here. So going down into the 1 minute time frame and just forwarding along the price as it goes along. Just forwarding along price as London Open is happening. Comes very close during that London Open as well. And as we start to get closer and closer to that New York Open time, around that 1 p.m. time, you know, this is a lot before, this is still at 11 a.m. We can see how it's starting to react into the supply zone, giving good rejections already. Still wasn't able to see anything clear. And then after seeing this, we've seen it trade into the supply zone once, twice, 3 times now. We can start to see, you know, market has started to consolidate in this zone. And what we can actually start to see is the formation, or the start of the formation, of this distribution schematic. So just labeling on the distribution, what we can see is the preliminary supply. We have the buyer's climax, automatic rally, secondary test, and this sign of weakness down in here. Now after this was all formed, what we actually started to see on both ends of this consolidation was liquidity forming. We had the sell side liquidity up top here, creating those equal highs within there. And we also had this buy side liquidity down in here with these equal lows. So now, because we are range bound, we are within, you know, equal highs and equal lows on both ends, then it was just a simple case of waiting for a certain set of these equal highs being manipulated, or these equal lows being manipulated. Now if these equal lows get manipulated, so we see a sell to buy movement on these equal lows, then chances are this is going to be a reaccumulation schematic and it's going to continue to trade higher. And if these equal highs get manipulated, then we'll be looking to see some sort of buy to sell scenario in this area up top here, and see this distribution schematic start to form. We have this as the upthrust as well, and we're just waiting to see which side gets manipulated first. So as we forward the price further, it's got close to the equal highs again right there, and we're seeing it's starting to create another set of equal highs just in here, and going down into fractals, it is giving another schematic within this zone. And there we go, that is a fractal distribution in a liquidity zone within the supply zone. And that should be telling you, okay, we should be getting ready to start selling off within this next candle. And then just analyzing the market structure as we get into this. So we have a low point here, a high, higher low, higher high, higher low, higher high, over higher low within here, higher high, and then we have this final higher low in here before it went on to run these miniature little equal highs within this point here. This is the final higher high right in there. And we can see the significant ones are the ones I've marked out, and the last one to get broken was this one. So this was indicating that we had our break of structure to the downside, and then we are enabled to have our entries at this 1 minute imbalance fill with stops just above the high. So we're looking around about a 5-point stop on this trade. There's around about a 4.8 to 5-point stop, and then obviously having, you know, a TP1 in here for a 126, which was lovely. And then seeing how price progresses There we go, that's entry filled. We get good movement away from the zone, which is perfect. It does come back to the entry again. And then we have our big movements away from our zone, which is what we wanted. Right there. So that was TP1 hit very nicely right there. And after we have that fractal lower time frame distribution up here, we can see that was actually the formation of that UTAD phase within the distribution. The breaker structured down, and then we have the test right there. So this is the test of the schematic, and then it goes on to give these last point of supply entries around these points here. And the final TP was based upon that 30-minute rally-based rally demand zone down in here, giving us that 1:41 risk to reward ratio. And as we watch price continue, we can see, and as I zoom out so we can see the whole picture, so we actually got very close to the final TP around about 1:30 p.m. time. So it was very close to the final TP, but I wanted to take a majority of my profits down in here, and then if we see signs of bullishness afterwards, then we'll close the rest of the sell-off. And then we start to see that 2:30 p.m. volatility come in there, which, like I mentioned earlier, was just a manipulation of price. Seeing as how it's come back down, we'd expect mitigations here, but it actually turns out to go lower and hits our final TP. Now, don't get me wrong, a 1:41 risk to reward ratio is absolutely amazing, and I'm very grateful for it. But this trade was kind of frustrating for me because it did not actually just stop at that 1:41 risk to reward ratio. Instead, it actually went lower down into these areas here. And as we zoom out, we can see how low it actually got within these zones. And moving back to the 30-minute, it actually went below these lows in here, which I did not actually expect. And the trade, it went for a maximum of around a 1:75 risk to reward ratio, which is absolutely phenomenal. Now, it's a bit of a kick in the teeth, but I'm still pretty happy and pretty grateful that I'm able to catch that 1:40 risk to reward ratio. So there we have the full breakdown of that 1:41 distribution on US30. I hope you guys really took value and learned something from this video. If you did, please like, share and subscribe. And guys, drop in the comments what you'd like to see more in future videos. Thank you for watching, and I'll see you guys in the next video for more of that trading source.